You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events most of all. Thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. Before we get into our intriguing content, let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are a few operators standing by. I can't answer all the calls.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number on your phone for future reference, 800-306-1990, 800-306-1990. So I will remind you, as I do on a regular basis, we are recording right here on Wednesday morning. We do that on all of our social channels, Wednesday morning, 10:30. And then we play the program on Go Country, 7 a.m. Sunday mornings. Josh, I'm watching the background. I mean, just as I say that, Josh yawns. It's not Sunday morning right now, Josh. You couldn't plan that one any better. Too bad you're not on camera with me, Josh. I mean, it's that would be great. All right, Sunday morning, 7 a.m. right here on Go Country. Let's take a look and see what we can celebrate on Sunday morning. Poinsettia Day. Okay, I like poinsettias. Gingerbread House Day. I know there's a local restaurant that's doing some gingerbread. They're having a gingerbread house building event, and that'll be Sunday afternoon. I think it's they call it Rockwell's or the Post if you're in Orange County. Do a great job over there. Great bakery. I do quality control for them as a public service. Gingerbread House Day. National Ding-a-ling Day. There's a lot of people that refer to me as a ding-a-ling, but the idea here of Ding-a-ling Day, I think it's you're supposed to connect with people we once talked to often. So that's National Ding-a-ling Day. And here's one that, I haven't seen this one out in a long time. Today's National Ambrosia Day. Do people still make ambrosia? I haven't seen ambrosia. It used to be a common item, but according to Greek mythology, it's the nectar of the gods, endowing strength and immortality to those who eat it. The term itself can mean something especially delectable to taste or smell. Earliest recipes go back from the 1800s. Citrus fruit, coconut, and sugar. How do you go wrong? Right? You put those things together. And there's some sort, I don't know what they use for the cream in there. There's usually some sort of creamy substance to it. So that's I used to like ambrosia, but I haven't had any in a long time. Let's move right along and see what else is going on in the world as we speak. Yeah, I should go and give you all of our, well, maybe not all of our freebies. We got to hold some back for the broadcast, right, Josh? So came out with our new home buyers guide this week, home buyers and home sellers guide. So if you go to rsrhbg.com, rsrhbg.com, you can get our new home buyers guide. If you go to rsrhsg.com, you'll probably guess that's home sellers guide. So you can get those. Both of them are free. We come out with those every quarter. So that is our new release. They just came out, I think on the 4th, something like that. So those are a couple freebies for you. We can also take a look and give you our mobile app. I say it's probably, to me, I like it. I think it's the best app out there. So you go to myfavoritelender.net, myfavoritelender.net. So that'll give you our mobile app. What do you want the mobile app for? Well, the number one search term, if people are thinking about real estate, is what's it going to cost me? Not the big picture, right? What can I afford? So you can put into the mobile app that you're looking for at a $500,000 house or $1 million house. And we're going to talk today about low down payment options. So there are some low down payment options, but what are you going to put down? And what will your payment be? What will the payment, including taxes, insurance? If you know the HOA, we can put that in there. Can you afford it? All comes up on the mobile app. And yes, it also has an area on there where you can look at what properties in the neighborhoods that you're looking at are available. All compliments of Ron Siegel Radio. So that mobile app, it is tremendous. Let's get maybe another one. How about those? Because this is a big topic on Ron Siegel Radio all the time. Credit. 7 steps we haven't given this one away in a while, Josh. 7 steps to a 700 FICO score. rsrcreditbook.com. rsrcreditbook.com. So we've got a lot of giveaways for you right there. A lot of giveaways. I guess I can't tell you about the credit book without telling you about the identity theft. Can you guess what the name is going to be for the identity theft book that we give away? Right, so it's rsridtheftbook.com. rsridtheftbook.com. Another one, all of these things are free. We give with all the stuff that we give away for free and try and help and educate people, it's just something that we like to do. It's something that I'm passionate about. Morning, Vanessa. Glad to have you with us this morning. So those are just, four free items, and we're not even, half the show hasn't even gone by yet. 4 freebies. I'm going to keep giving you free stuff. It's the holiday season. I feel generous right now. So let's continue on with what we've got for you. Now, I've got some people who made some comments. I was on a conference call earlier about veterans, and it really bothers me when people they feel that they don't understand the veteran loan. So frequently, that which we don't understand, we don't like. I'm going to tell you right here, right now, the veteran loan is the best loan on the market. If you qualify, if you served, thank you. But the veteran loan, if you're a veteran, you can use it more than once. There's so much misconception about the veteran loan. It drives me crazy that people just don't understand the veteran loan product. So it's the only loan out there when you do the certificate of value. They don't necessarily call it a appraisal. They call it a certificate of value. Well, if the appraiser doesn't think that the value is meeting the contract, before they turn in the appraisal, they've got to call and let us know and see why that is the case. So think about that concept. If you're looking at if you are a veteran and you're not being offered a VA loan, if you're not considering a VA loan, I'm going to ask you, why aren't you considering it? Right? You can use it over and over again. If you've got a service-related disability, the funding fee drops based on the percentage of disability. So find somebody that understands the program to help you. Realtors, if you don't understand the VA loan, give me a call at 800-306-1990. We'll talk about it. We'll share with you why it is the best product on the market, why our veterans are entitled to it, why they deserve it, and why we should be getting into that right away. Equity, that's another big issue right now. We've heard recently Case Schiller came out with property appreciations again for the month. A lot of people have a lot of equity, and if you haven't looked at refinancing your house to get rid of mortgage insurance, shame on you. I know we've called everybody that we've done loans with that have mortgage insurance, and if they've done a loan with us in more than 7 or 8 months ago, we're throwing it out there. I mean, I can't force you to drink, but if you like saving money as much as I do, I'm going to recommend, hey, you know something? Have an evaluation done. If you have not, got another freebie. If you have not got your home digest to see what your home is worth, rsrhomedigest.com, rsrhomedigest.com. If you haven't got that yet, if you're not registered there, that's going to tell you every month an approximation of the value of your property. If you've got 20% equity, you qualify to get that mortgage insurance removed, either the FHA mortgage insurance or the PMI, either one. Now, FHA, if you've done it in the last few years, they changed the rules. Yeah, the mortgage insurance stays on forever. So you just have to need to restructure that loan to get that off if you qualify. If you've got the private mortgage insurance, some investors will take it off right away, some won't. So we want to check on all of those issues for you. Just giving you the lowdown. We're all here about education. If you call our team, great. If you've got somebody else that you love and want to work with, that's fine too. Just make sure that they're giving you the information you need. And I'm going to share with you at this time of year, our team's calling right now. I think we've got about 1,000 calls that Josh is going to make this week. Or maybe Jocelyn and Jennifer will all help. But we're recommending, if you haven't done this, we have a little bit of downtime. I know you're busy with the holidays. Find your home insurance declaration page. Send that to your Rockstar insurance agent. If you don't have a Rockstar insurance agent, call us at 800-306-1990. We'll put you in touch with one. But send that to your Rockstar real estate agent. Let them tell you if you've got the right coverage for you. Maybe the prices has even dropped. So just a thought for you right there. You're listening to Ron Siegel Radio discussing your real estate, current events, and the financial markets. When we come back, why it just became much easier to buy a home, top mistakes to avoid in a divorce settlement. I don't think we've done that one yet, but we'll look at that. And I'm also got some low down payment real estate options. Buying a house, low down payment, all that and more. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. Do you have a home loan right now? Obviously, a majority of the people who own real estate, yes, they have a home loan. And it fascinates me how many people want to get out of debt. They want to get rid of that home loan. And they want to get rid of the credit card debt, student loan debt, auto debt, and they don't know what their blended household interest rate is. Blended household interest rate. So that's basically all you have to do is the easy way is you send an email to rj@ronsiegelradio.com, rj@ronsiegelradio.com, and you include in that your mortgage statement You can redact the account number, your address. I don't care. We're not that interested in that stuff. You can put in there your student loan amount, payment, and interest rate. Put in there any and all credit cards, amount, payment, and interest rate. Auto loans, amount due, payment, and interest rate. And we put it into our blended household interest rate calculator. And we take a weighting. Obviously your mortgage is going to be more than your car payment, most cases. Right? So you're going to put all that right in there and see what your blended household interest rate is. I've had people come back and they say, Ron, I don't want to do anything because I've got a 2.5% interest rate. And I say, yeah, but your blended household rate is 4.8. What's the difference what any one component is? What we care about is what is the big picture. Now you take that 4.8, blend everything together if you qualify, and maybe you can get a new home loan. Even if you go down anything below 4.8, you win. Right? So 4%, we can say winner, winner. I know Josh is in Vegas. They don't hear winner, winner too often. Right? 3.75, that's even better. 3.5, that's better yet. Right? All those numbers, you put them into the blended household calculator, you see what the numbers look like. Then you go and fill out our form, rsrnodebt.com. rsrnodebt.com. Fill out that little form, and we're going to get you started to see if it makes sense for you to run through this whole program. If it makes sense, then we look at the rapid payoff. rsrrapidpayoff.com is somebody that we did, and we helped this family go from 23 years to I think 11 years, paying off all their debt, not spending an extra nickel. Think about that. And that goes back to the same thing I said to you. Your blended household interest rate is 4.8. You're sending money to the wrong places, right? So we want to get that down, and now you still send all the same money. But if you do it strategically the way we teach you, you're going to be out of debt in 11 years, 12 years, 10 years, something like that. Every situation is unique. But the key is getting started, right? Get started. Go just a few of them there to see if it works for you. rsrnodebt.com or rsrrapidpayoff.com. No debt is the form. Rapid payoff is an example. We're going to create a rapid payoff scenario unique to you once we know what all these debts look like and help you out right there. So that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. Better Outcome segment today brought to you by mycdlp.com, mycdlp.com. Top 3 mistakes to avoid in your divorce settlement regarding the marital home. Might be timely for some people, but we just want to get you this information. Often in a divorce, we are more focused on curing the problem at hand, like distributing the real estate and assets, that we forget there is life after divorce. Biggest challenge is the lack of knowledge, understanding, and preparedness of how the various pieces of the divorce puzzle fit together and indeed overlap. You don't know what you don't know. And not being prepared can cause more damage than good. 3 financial mistakes to avoid when negotiating the marital home during the divorce settlement. Number 1 is being emotionally attached to the house. Don't be married to the house. The marital home often brings an emotionally charged debate to divorce negotiations, which can impair good decision-making. Often divorcing spouses that are emotionally attached to the family home do not realize that they can't afford to keep it, yet they fight tooth and nail to keep it, sometimes at the expense of the retirement planning. Instead, try separating the emotions from the asset and look at it from a financial or business perspective. In addition, the home is a significant cash expense. You got mortgage payments, property taxes, repairs, utilities. Let go of any emotional attachments you may have. During your divorce and settlement negotiations, your primary focus should always be on how to maximize your finances by making sure you'll have enough cash for living expenses after your divorce. Next, not producing an accurate budget. Divorcing spouses usually underestimate living expenses when they produce their initial budget for temporary spousal support and later find out that they cannot cover all of their bills. Use a financial professional to help you create an accurate and complete budget. Housing expenses add up to much more than the monthly mortgage payment. In addition, planning on the recurring costs of owning and maintaining the property is often overlooked. Lawn care, broken hot water heater, fence repair, leaky faucets. Prepare for the unexpected. Third, failing to consider your eligibility for mortgage financing. Divorcing spouses who have previously had mortgage financing don't understand the effect of divorce on obtaining future mortgage financing. Whether refinancing the current mortgage for an equity buyout or getting ready to purchase a new home, divorce will have an impact. The spouse retaining the marital home may have qualifying concerns if support income is used for mortgage approval. Likewise, the spouse vacating the marital home to purchase a new property while still on the mortgage for existing loan may have issues qualifying for a new mortgage. Working with a certified divorce lending professional, CDLP, the incorporating divorce mortgage planning into the divorce settlement may help both spouses obtain new mortgage financing post-divorce. The CDLP brings tremendous value to the divorce team during the settlement process because of their more vital perspective. Their understanding of the intersection of family law, tax law, real estate, and mortgage financing truly separates them from other mortgage professionals in the industry. A successful divorce settlement results from putting the pieces of the puzzle together in such a manner that both divorcing spouses come out of the divorce whole. Therefore, each member of the professional divorce team should bring value and perspective that benefits the overall outcome and success. Contact a CDLP, that's us, today for a copy of Divorcing Your Mortgage Homeowner Workbook. You can get your copy mydymworkbook.com, mydymworkbook.com. It's a guide to credit, real estate, mortgage financing after divorce. This workbook helps you stay organized, prepare, and understand your mortgage financing position, whether you need to refinance the marital home in an equity buyout situation or be ready to sell and purchase a new home post-divorce. Again, mydymworkbook.com, mydymworkbook.com. And I'm just going to share with you, I've shared this product with many people, and it just is an organized way of taking a look at, where you stand right now, and does it make sense to keep the home, not keep the home, sell the home. You want to make sure that everybody's getting the fair share at the end of the process. You got married for a reason. Maybe you can get along at least a little while during this process of dissolution. And if you don't utterly hate each other at the end, maybe there's a better outcome. And again, you can go and get it. We put out a weekly newsletter, mycdlp.com, mycdlp.com, certified divorce lending professional, mycdlp.com. I probably should have put that in the same format as everything else, Josh. We probably should get rsrcdlp.com just for people like me that are memory challenged, right? If we had everything as the same, well, of course we had them all the same, there would be Josh would have no challenges over there trying to keep track of all the craziness that I create. But in any event, mycdlp.com, mycdlp.com. You get a weekly article from us talking about the divorce process, where you are, what's going on with it. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, low down payment options. We'll talk about that. And I think I've even found another divorce in appraisals. I think we're going to talk about that one as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do The Unillo real estate reference and the divorce decree could cost tens of thousands of dollars. A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Good morning, Mitchell. He's checking in from the happiest place on earth. Josh, you were just out there recently, weren't you, at Disneyland? I haven't been to Disneyland in ages. I can't even remember the last time. Maybe they'll let me in one of these days. I shouldn't. Mitchell always asks us about going, and I'm the one that's holding us up. Okay, so we got a workshop for you today. Low down payment options is what we're gonna chat a little bit about. I hear this all the time, and it drives me crazy. I'm saving up for 20% down. Well, if you are in Southern California, if you're in Orange County, California, and you're looking at a $950,000 median home price, you may be saving up for a while, right? That's $950,000 is $190,000 in savings. How long do you think that's going to take you to get? It's going to be a while. So maybe there's better options for you. Maybe the idea is to start a little early. So we like to give you as much information as we can, learning about loan options with small down payment programs for you. Just a little bit about me. Obviously, you know that I've been, if you've been listening to Ron Siegel Radio for any length of time, been doing this for, now I could say this. I just started using this recently. I've been doing this since the turn of the century. Right? I mean, been doing this a long time. Heck, I've been doing this longer than some people are old. I bought my first house in the early 80s. Helped a fraternity brother buy a house before then. Don't laugh, Josh. I mean, I know it's a long time ago, but we've been doing this for a long, long time and helping a lot of people. Now, for the last 11 years, we've been doing radio. We started on Go Country about 6 months ago, give or take. And now we're 6 days a week. We're chatting on all of our social channels. We're here on Go Country every Sunday morning, just educating, trying to give you the best information we can to help you along your financial journey. No, I had my licenses at Merrill Lynch. I don't have them any longer, but they didn't take my education away. No, they didn't take my license away either, but I didn't renew them. So I have all the education, just not the licenses. I can tell you what we like to do with these things and just try and give you as much education as possible. Today, we're going to cover why you do not need a 20% down payment to buy a home. We're going to discuss the reasons why, along with detailed information about different loan programs out there, so you know which programs are available for you. We'll go over everything you need to know, including what the benefits are and how it can help you find the home of your dreams. So let's get it on. You may feel like you've been trying for years to save enough money for a down payment for a home. You've cut corners, taken lunches to work, and yet home prices continue to rise, and your dream of owning a home seems out of reach. Maybe you need to cut down on that Starbucks habit. Guess what? Maybe you're closer to owning a home than you think, because for many loan programs, you don't need to have 20% down for a down payment. No matter how much you have, there's probably a mortgage program that can help right now get into a new home. Let's take a look at a few options out there. We'll begin with the FHA home loan. And I can tell you this, it's amazing how many people I have spoken with who say, I'm saving for a new home. And I said, what's your game plan look like? What does your roadmap look like? I'm just saving. That's not a roadmap. It's like when I say I'm going to Vegas, I turn on my GPS. I've driven there a million times, but maybe there's a SIG alert out there on the freeway, and maybe I want to take Route 66, right? That's an option. Maybe I want to take Highway 10 and go in the back way through Boulder City and Havasu because the road's going to be blocked for the next 20 hours, right? You need to know what's going on. This is the same thing. So get that loan application in, talk to a licensed professional, not a headset agent, right? Let's look at the FHA loan. This one allows for 3.5% down. So I'm not going to try and do the math in my head, but if you're looking at a $500,000 house, I think that's about $17,500. FHA loans are insured by the Federal Housing Administration, FHA, and these loan programs are perfect for first-time home buyers. FHA loans require mortgage insurance premiums, or what's called MIP. FHA loans are also assumable, which means that a future buyer of the home can purchase the home with its FHA loan and its mortgage rate still attached to it. You can actually pass today's low rates on to buyers tomorrow. That's a pretty cool idea, I think. So that's the first option. Home Ready Mortgage. This is a low down payment available through Fannie Mae. The Home Ready Mortgage allows for 3% down, grants access to below market mortgage rates, and offers discounted rates for private mortgage insurance. Home Ready programs also give the ability to use income from everyone who will be living in the home toward the actual mortgage approval. This could include parents earning pension or Social Security income, or roommates who want to all go in and buy a home together. The Home Ready program is available in low-income areas, areas with a high minority population, and areas affected by a natural disaster. However, you do not need to be a low-income household or a minority to get approved. You must only buy a home in a pre-approved area. Conventional 97. It's a 3% down payment program, a special program, which was recently reinstated by the Federal Housing Finance Agency. They're the parent of the Fannie Mae and Freddie Mac programs. The conventional 97 requires a down payment of just 3%. Program also allows a buyer's down payment to be gifted by a third party, so they really don't have to have their own money for a down payment. The only requirement is that the person who is gifting the money for the down payment is a blood or marriage relative, a legal guardian, a domestic partner, or fiance or fiance to the buyer of the home. The conventional 97 mortgage is limited to $510,400. That's probably going to change regardless of the local mortgage loan limit, and multi-unit homes are not allowed. The program is also restricted to fixed rate mortgages only. The conventional 97 program may cost more on a monthly basis than other loan programs like FHA, but you can cancel the mortgage insurance in as few as 12 months from the date of purchase. So in the long term, your monthly payment may be less once the mortgage insurance is canceled. The best loan on the market. If you have served our country, thank you. First, I say that, thank you. Be sure to thank them. Thank anyone, right? Second, you've got a great benefit in the VA home loan. You may not have learned about the VA home loan in boot camp, but it is a pretty cool benefit that should be definitely considered. VA home loans are loans which are guaranteed by the Department of Veterans Affairs. VA home loans are available to active duty members of the U.S. military, honorably discharged service members, and many surviving spouses. VA home loans are among some of the best loan and no down payment mortgage programs available today because they require no down payment whatsoever and never require the borrower to make a mortgage insurance premium payment. The VA home loan can be used for most any type of home, including single family, condo, and multi-unit. VA loans, like FHA, are assumable by future VA home buyers. I will share there are some intricacies in the program. If the veteran only has 12 months or has less than 12 months on their contract, got to see their job offer letter of what they're going to be doing post enrollment or post active duty, or we've got to look and see if they've re-enrolled. Just a little bit of a quirk in there. Next, we've got the USDA loan is guaranteed by the U.S. Department of Agriculture and allows for 100% financing. USDA loans often thought of as rural loans, but they're also available in non-rural areas, including within many U.S. suburbs. There's actually a zip code in the Santa Ana area that qualifies for a USDA loan. I don't know of much rural land in Santa Ana, but in order to qualify for a USDA loan, the income of a home buyer's household may not exceed the local media by more than 15%. However, large households are granted certain exclusions. Conventional home loans with PMI, private mortgage insurance. If you're looking to get into a house with less than 20% down, a conventional home loan with private mortgage insurance may be an option. Private mortgage insurance, or PMI, is a type of mortgage insurance that protects the lender if the borrower stops making their payments on the loan. PMI only applies to conventional loans, but other loan programs like FHA requires mortgage insurance premiums too, although mortgage insurance on FHA loans operate differently than PMI. How much money you put down plays a role in determining how much PMI you'll have to pay. A small down payment means a bigger risk for the lender, so the PMI will cost more. The type of loan, like a fixed rate mortgage or adjustable rate mortgage, will affect how much PMI will cost, as well as the credit score. One of the biggest advantages of PMI is that you may be able to get rid of PMI at some point in the future. This means that after what you owe on your mortgage is below 80% of the value of the home, you can write to the lender and ask them to remove the PMI. If you qualify, it would mean that the monthly payment would decrease. Hey, Josh, while I'm talking about this one, can you take a look and see? I think we did a workshop on getting rid of PMI. Maybe we can share that link. I don't know if we've got that or not. If not, we'll put it in the show notes. PMI gives the option to get into a home with less than 20% down, which could help you realize your dream of home ownership. Finally, we've got the Piggyback Mortgage, 10% down payment. So the Piggyback Mortgage is not really a mortgage at all. In fact, it's really two mortgages. It's called a Piggyback Mortgage because one mortgage is piggybacked on top of another in order to borrow 90% of a home's purchase price. You can even do it to do 80% of the purchase price. This loan is also called sometimes an 80-10-10. It could be called a 70-10-10 or 70-10-20, all different types. Piggyback Mortgage allows you to put 10% down for a down payment. This loan allows you to avoid having to pay mortgage insurance. Instead of one mortgage, you have two mortgages. The first mortgage is typically a conventional loan and is approved at 80% loan to value. The second mortgage is typically a home equity line of credit that is 10% of the loan to value. Piggyback mortgages are often used by home buyers who plan to pay down or reduce the balance on their second mortgage within the first 24 months of home ownership. So I don't know, 1, 2, 3, 4, 5, 6, 7 different programs that I just shared with you in the last 13 minutes to give you an idea of low down payment options for home buyers. Think about that. Our friends at Geneva Financial, the team at Siegel Lending Team, standing by to help you out in getting any of these different programs. Actually, the more important thing is for us to chat and then talk about, something. How do we do what's right for you? How do we make sure that you're on the best path for you and your family? Contact information 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just give us a call. We'll educate you, talk to one of the team members about what loan fits you. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, let's see, we might even have some time. Let's see, what what makes a divorce appraisal different? What makes a divorce appraisal and a mortgage appraisal? What's the difference between those? We might even have time for Your Credit Matters, all that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Better outcomes segment today. We'll do another one. I like better outcomes. We're always looking for a better outcome, aren't we? And I know there's a lot of people getting divorced. Unfortunately, that we're divorce season. I didn't realize there was a season for divorce, but unfortunately, a lot of people, you didn't get that gift that you wanted during the holiday season, and divorce comes right after that. I don't know. I've been married 34 years, so I'm not sure anybody would ever put up with me beyond my wife. She's a saint. But hey, let's look at this one. Better outcome brought to you by mycdlp.com. Is there a difference between a divorce appraisal and a mortgage appraisal? When divorcing, you should obtain an appraisal or a comparative market analysis. Assessing the value of the marital home and other real estate owned in divorce is a big deal in the settlement process. The question is how to determine that value best. The two most common methods for obtaining the value of real estate are obtaining an appraisal from a licensed appraiser or having a real estate professional provide a CMA. That would be the comparative market analysis. But what's the difference between the two? Both methods are an opinion of value, and no two will ever give you the same value. The primary difference is perspective. An appraisal is completed by a licensed residential appraiser who bases their opinion of value on recent comparable homes sold data. A comparative market analysis is completed by a licensed real estate professional who bases their opinion of value on what the property may sell for in the current real estate market. While both opinions of value are valid, it is crucial to understand the perspective of each opinion and how the two methods apply to the current situation of the marital home. For example, when considering the options of one spouse retaining the marital home and refinancing, an appraisal may be the better option. On the other hand, if considering a sale of the marital home, a CMA may be a better option. So what makes a divorce appraisal different than a traditional mortgage appraisal? A divorce appraisal is not the same as your typical appraisal used for lending purposes. Some of the differences are, since a divorce appraisal is not related to financing or lending, it is not required to comply with agency guidelines. Typically, a divorce appraisal is completed on a non-agency form, such as GPAR, General Purpose Appraisal Report, or written in a narrative form. When they order an appraisal, most attorneys' primary concern is the final value and how it will affect their case. Therefore, they are usually not too worried about how the report is presented so long as it is defensible if contested. The most common appraisal form for the Universal Residential Appraisal Report, 1004, Does the form really matter? Yes, it does. The common URAR 1004 form is not intended to be used for valuation matters other than obtaining mortgage financing. It even says so in the report. Yet all too often, this is the go-to form for inexperienced appraisers presenting appraisals for legal purposes. This technicality could potentially cause you to have a non-defensible appraisal. Technically, the report is invalid due to the form's intended use being violated by the appraiser. The court could deem the report inadmissible and jeopardize your case. There is a simple solution. Several general appraisal forms are available to residential real estate appraisers that are in compliance with USPAP. They are typically called GPAR forms, General Purpose Appraisal Reports, and they address most residential usages. That'd be single family, multifamily, and condo. When ordering an appraisal, be sure to ask your appraiser which form they intend to use. For example, if they say URAR 1004, you need to insist that they use the GPAR form, or you run the risk of presenting an invalid appraisal. What is the statement of assumptions and limiting conditions in the appraisal report? First, it should be noted that each standard appraisal form contains a general notice of statement of assumptions and limiting conditions. Prudent attorneys and divorcing homeowners should note that the licensed appraiser is submitting an opinion of value for residential real estate only. They are neither a surveyor, inspector, title representative, nor engineer. So I put on our sheet, if you're watching us on ronsiegelradio.tv, you're going to get some information from us. You can look in, and we can send this to you, that shows you the statement of assumption and limiting conditions. Wiser to rely, and all you have to do is go to mycdlp.com, and you can get this full blog post that we put out. It is wiser to rely on a current title report to verify ownership and outstanding liens against the property during divorce proceedings. If property lines, outbuildings, etc., are in question, it would be wise to hire a surveyor to survey the property. When the appraisal report indicates there may be property conditions in question, such as furnace or other mechanical concerns, roofing conditions, or general report repairs noted, such as broken windows, obtaining a complete home inspection may be in the homeowner's best interest. One last thing to consider regarding obtaining an appraisal during the divorce process. Note that the mortgage lender cannot use the appraisal acquired during the divorce settlement process upon which a settlement was agreed upon. Each lender must use only a lender-owned appraisal or to directly buy the mortgage company during the mortgage process. If mortgage financing will be a part of the settlement agreement, like an equity buyout, it would be in the best interest of all parties involved to obtain the services of a certified divorce lending professional, that's us, CDLP, to begin. I wonder why. Gotta love it. Good to begin the mortgage process. This provides confidence to all parties that the same valuation will be used throughout the process. Involving a divorce lending professional early in the divorce settlement process can help the divorcing homeowners set the stage for successful mortgage financing in the future. Again, we talked about this earlier, mydymworkbook.com. If you've got real estate, the workbook will give you this information. It'll help you lead you to this information. Again, I don't give you legal advice. I don't give you tax advice. CDLPs don't do that. But mycdlp.com does give you information, education, and the Divorcing Your Mortgage Workbook. To me, it's the best resource out there. The best resource out there for putting all of your assets, your real assets together and dealing with them. So again, that's the Better Outcomes segment brought to you by mycdlp.com, mycdlp.com. So if you're listening to us in the workshop in the last segment, I was sharing with you that there are some ways of getting rid of mortgage insurance. And we actually did a full workshop on that. So if you're watching us on ronsiegelradio.tv, and we'll put this in the show notes, rsrloans.com/presentation/24729. rsrloans.com/presentation/24729. 24729. We actually did a full workshop on getting rid of mortgage insurance, and it's a pretty comprehensive look, so I would highly recommend it. We've got it right there on the video. If you're listening to us on Go Country and you're up early with us, rsrloans.com/presentation/24729. Josh, why don't we put a banner, or not a banner, but a tile, and we'll put that. We'll share that right on our Ron Siegel Radio Facebook page, maybe right now. So let's. No, Josh isn't going to get up early on Sunday morning, but we can schedule it so it shows up there Sunday morning. All you have to do is go to Ron Siegel Radio on Facebook. So it's facebook.com/Ron Siegel Radio, facebook.com/Ron Siegel Radio. We do a whole lot of workshops. I don't know if the workshops all show up underneath the one when you go in there, but this is just a great thought. Also, we didn't even mention when I was talking in the last segment about VA loans. We love our veterans. We've teamed up with Homes for Heroes. So every veteran gets a discount on their loans. They get a rebate, a lender credit when they do a loan with Ron Siegel Radio. rsrhero.com, rsrhero.com. Holy cow, Josh, we've given up. How much stuff have we given away today in just an hour? Right, so we've given away a lot of stuff. I hope you're enjoying all these things. We don't charge anything for any of this. We do hope you'll consider the team for your lending needs. I know there's a lot of people right now looking at refinancing to pull some equity out. Not, I hope, for buying a new car or boat, but maybe for reinvestment, for building that real estate portfolio so that you've got a nice nest egg going forward. Maybe you want to retire. Now, don't forget, we did talk earlier in the week. I don't know if we did that. RSRalpha3taxguard.com. RSRalpha numeral 3 taxguard.com. If you want to have a strategy for maybe avoiding any kind of or deferring capital gains taxes, that's on your real estate, on your selling of a business, highly appreciated assets. RSRalpha3taxguard.com. Get you started on that, RSRalpha3taxguard.com. And as always, I ask you, come back here and join us on Ron Siegel Radio. We're here every Sunday morning. Now we take the holidays off, but we're here every Sunday morning to educate you. And as always, I ask, set that first radio preset button to come back here and join us. Thanks to Josh, who's engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Me over the limit. I'd like to call him something. I think I'll just call it a day.